Did you know I used to be an air traffic controller when I first joined the Navy? Air traffic controllers learn how to talk really fast. And I'm going to need it for today's session of how to make money trading stocks because we're going to do a rapid fire stock review that's going to cover 11 of the best, and I said the best, IBD growth stocks that you're going to want to pay attention to in this down market. So buckle up your seat belts. Let's get ready to go. Let's jump into today's session. Hey, good day, everybody. This is Dennis Woodburn, the Active Trend Trader. Welcome to this special edition of how to make money trading stocks and options, plus some trading tips. Boy, this is a jam-packed session. When I said special edition, what I mean by that is this is the weekend after Thanksgiving, 2021. This week was a little bit surprising to me, to be really honest with you. Surprising in that it went against the norm. Normally during the after the week of a holiday, the market has a tendency to go up. In other words, it has a bullish bias. This week, the bias got ripped off and just jammed in our ear. And as I stated on my Instagram account, I did just a little blurb on it on Friday that there was a DBA kind of trade. And what do I mean? Not a DBA, but a DBU kind of day. What does that mean? Well, stay tuned to the end. I'll be able to share with what DBU kind of market means. So let's go ahead and jump in today because we're going to be jam-packed. I'm going to be doing some things for the first time today, and I'm going to see if I can keep this within 20 minutes. So the question is, are you spending hours looking for stocks every weekend? Well, there is a better way. The Active Trend Trading autopilot trading system could be for you. We'll talk about that a little bit later, but it's clear, simple, direct, and it's focused on helping you trade your way to wealth and financial freedom. And today, and with my, the Active Trend Trading system, I have a yearly goal of 40% profit, ROI, if you will, and then also 65% winners versus losers. How are we doing this year? Basically, we're up. You'll see that here shortly. We up until this week, we were up over 30%, pushing on towards that 40. We dropped a little bit. We dropped in tune with what the NASDAQ did. We're down. And we'll look into that here shortly. We're going to be doing market index review, stock picks of the week. And instead of the elite traders, it's going to be just me. But we're going to do a rapid fire. You're really going to, I think, let me know what you think about the rapid fire. Leave a comment down below. That's one of the things with us people who tend to be technically oriented. We don't like to necessarily leave comments. But hey, do your butt a solid. And, open up some conversation with me down in the comments section if you want to have, if you want to have me take a look at a stock, that's really great. But remember, as Tom Sosnoff says, this is what mechanical systems is about. Wealth creation is a derivative of mechanically addressing opportunity. And I believe that wholeheartedly. I've heard many people say, especially going into the end of the year, where some people are going to be very, very disappointed with how well they traded. And part of the reason is because you're not trading a solid, proven system that it basically has a winning edge. You're basically trading some strategies. It may be an option strategy, maybe a stock strategy. But the fact of the matter is it's not based on the foundation of a system. And you're probably either, dying the death of 1,000 cuts with these small losses, or you're getting your face ripped off because you don't know how to trade trade when the market starts to go against you, like it did this week. If that's you, continue to watch. You're in the right place. Remember that all the materials we do present are for training purposes. Traders should always pay per trade any new method prior to the risk of their own personal capital. Here's where we sit. And this was as of the close yesterday. As you can see, the week before, we're up about 30.9%. We're beating the S&P by 58. We took a little bit of a step back. This week, dropped about 4%. right in line with what the NASDAQ did. NASDAQ dropped 4% from the previous week. And so since we trade primarily NASDAQ and or growth stocks, that is much in line with, with the indexes that we track because of the stocks we track and also the ETFs that we're looking at. So let's go ahead and let's jump back here. Let's go ahead and take a look at here's where I start having some fun. Let's take a look at the indexes. So this is a pretty pattern, folks. Okay, we were watching the indexes, and what were we seeing? Basically, we had a pullback after a really strong uptrend, and then we had a rally attempt. Now, one of the things that's very interesting about this rally attempt, we actually broke out above the past high over here, but then it reversed the same day. And the reversal was basically, I call it a breakout fake out. It breaks above the old resistance line and then pow. Now, what was interesting, this was on, actually that was Monday of this past week. Let me make sure here. Yeah, it was Monday. There we go. Yeah, Monday the 22nd. And what happened was we had a shooting star the Friday before. Monday was a strong bearish engulfing. Now, normally what we're going to be doing is watching those for a potential pullback. Nothing had changed. Nothing was saying, hey, the momentum has totally shifted, although we were getting some signs. What were the signs? TSI, negative divergence. And how do we mean negative? This was going down as this was basically setting up and making a new high. The market forecast is finally turning down. Take a look at going into next week. Take a look what happens when the market forecast breaks below that's the positive 80 line. What tends to happen? Now that we now also have a breakdown to the bottom, to the downside, we went through the 34. We're below the 20. So watch for a continued jackhammer effect. We've talked about that in the past, where price will basically come down. And let me get a good color here that you can see. Let's use this color. Where prices come down, they hit the moving average. They hit the moving average. And the moving average starts to what? Do what? The moving average starts to roll over like that. Now, we are now down below the 20. So the 20 and the 8 have not crossed yet. So I really, other than my momentum shifting to the downside, now I should be very cautious about taking any upside positive bullish trades until we get a positive indication that the momentum is shifting. Right now, nada. The other way I can look at trading that is, where does this entity, let's jump ahead and jump over to the NASDAQ. I think the NASDAQ will give us a little bit better picture. There we go. The Qs, if you will. NASDAQ, similar type situation. Yeah, the story's the same. Here's Monday, bearish engulfing, drops the 8, jackhammers down against the 20. Now, Friday, what happens? We had a pullback up into the midsection of Wednesday's candlestick. And then Friday, being a short day, that's pretty darn impressive that we had that much volume. Remember, it's a half day on Friday. Everything is rolled over to the downside. There's a time when we go back and we say, okay, with this being the case, what does it look like? What does it most look like? Well, it looks a little bit like what happened in there. Okay, that was the last rollover. And so if we did something similar, now of course we're going from a much higher high here on the TSI, but can you see the negative divergence there? We are also getting a little bit of negative divergence on the market forecast. If you can see those, you can say, okay, I see them. Now I'm starting to get the negative downside on this. Now, how do we want to potentially trade it? Since we are below both the 8 and the 20, here's what I want to be looking at. I want to be looking at the potential of, let me get a, where does it become interesting? It becomes interesting down here at the old breakout level. So what is that? That's the 50-day moving average running up that way. That also becomes interesting up here towards the midsection of Friday's candlestick and watching that 8-day moving average. If the 8-day moving average is dropping, just pay attention to where it might be. Put an alert right there to say, if I get up to there on Monday, Tuesday, Wednesday, Thursday, if I get up to right there, I want to be basically primed for a downside move. Why? Well, because when the market is showing this kind of momentum shift, you want to be looking at trading pullbacks, but pullbacks into the moving averages that are now acting as a level of resistance. So that's what we're looking at the NASDAQ. Again, I like it at the 20, somewhere between the 20 and the 8. So that would be an opportunity to get short, do a put, or do a call credit spread. Okay. IWM, Russell. Russell just actually was absolutely taken to the woodshed on Friday. As you can see, it was already in more or less a correction. We had dropped below the 50% retracement from this low to high. We can now erase that and just see, okay, now we've broken down past that, almost to the 1272 extension. But let's go and just take this out of the picture for a little bit. I'm going to get rid of this Fibonacci magic fib box. And now I'm going to go back to a little bit longer time frame. I'm going to go over to the weekly chart. As you see, that low right there corresponds to that low right there. That is a significant low on a weekly chart. Go ahead and grab your fibs. Go here. Go here. Now where are we go? Now where are we going? Now where's the magic fib box on this one? As you can see, we got to the 78% retracement. Look for a continued falling down. This gap in here. So the magic fib box is now, let's draw that in place on that, is somewhere between there and there. There we go. Now I'm going to go ahead and get rid of the fib box, remove that. What am I looking at? As you can see also, we have a gap down. Okay, we have a window. Windows are typically shut, or they will be basically closed, or gaps are closed. They talk about that all the time. But it doesn't have to happen immediately. Sometimes you get a gap down. It doesn't get closed for weeks, and sometimes even months, and sometimes even years. But they eventually will get closed. At this particular time, since we blew past the 50, the 20, 34, we have a crossover in the 820. I would look at, if I'm going to trade any of the indexes to the downside, the best candidate may very well be the Russell. Now, why is that? Well, one, inflation, no matter what the administration tries to tell us about how great things are and wonderful things are, let's face the fact, businesses are hurting out there. Supply chains are, I would say at a breaking point. I don't know about you, but I think the big thing that, kind of the 900-pound gorilla in the room is actually the issue of inflation. And with the, as you saw, why did the market fall on Friday? The market fell on Friday. Again, look at that was the biggest downside volume on the Russell in heavens, let's go back here. Let's just pop it back. See if we can do that. There we go. Look at that. That was the most, and that was a half day, going all the way back here to where it hit its last low, around 716, and that was 7/16, 2021. And so, I'm filling you with all the bad news because I am going to be having some good news here shortly. But that's a significant sell-off. Where would it make sense for the Russell to maybe regroup and bounce? Well, heavens, we could look at the bottom of this range that had been trading in all year. We could look approximately right where it's at right now. Again, longer term, it has not broken the 40-week line, which is this one here on the weekly chart, but everything has rolled over. I mean, it is rolling over. And take a look at, how steep, as you can see. And this is a great, lesson. Here's where the market forecast intermediate line crossed below the 80 line right there. So when that starts happening, pay attention to what happened before. This, my friends, is the worst pullback. Matter of fact, the last 3 weeks in the Russell have been kind of the worst weeks that we've had for a while. So can it continue and move further down? You betcha. So, but I would look somewhere between this line here, let's say 218, all the way down to 210 or 211 for a zone for it to say, okay, this is as far as I'm going to go. I'm going to, and so, we'll watch it from there. Again, this is, I would look at any kind of a pullback up towards those moving averages for an opportunity to do some kind of a bearish trade on IWM. So, okay, I know you've been waiting for it. Are you ready? Are you ready for rapid fire? I hope you are, because rapid fire starts right now. Okay, let's get going. Rapid fire. Well, before I get going with rapid fire, let me tell you where these stocks came from. One, they came from two sources. One, the new stocks that came onto the IBD 50 list this week. There were four of those stocks. The other one was what stocks on the IBD 50 for this week had the strongest results fundamentally. In other words, these are the, of the strongest growth stocks, these were the strongest fundamental stocks. And I'm going to show you how to get that sort as soon as we get through the 11 stocks. Did I say 11? It's 11 stocks. So here we go. First stock we want to take a look at is Boulder. What's Boulder telling us? Well, Boulder's telling us that it's in a very strong uptrend. Where do I want to pay attention to Boulder at BLDR? Basically just draw a trend line across here to here. It looks like it wants to do somewhat of a pullback. Pullback would take it down to somewhere between the 8 and the 20-week moving average, which is going to be down here. So at this particular time, it is not in the buy mode. The momentum has shifted back down. Look to pick it up. I would say it's got some strong support down here at the $64 to $65. That was the breakout after earnings. Crocs, everybody's favorite ugly shoe. Crocs, with the market just getting, its face ripped off, Crocs held up really, really, really well. Matter of fact, look how low the volume. Nobody was selling their Crocs. And so it's not a Croc that they weren't selling their Crocs. That is really a bad pun. But what's going on here? As you can see, oftentimes when the momentum indicators start to shift over and start to roll over, if the stock just kind of holds up fairly well, that's a strong indication. So Crocs, I'm putting on my list for this week, any type of a rebound down here about 164 to 165. It may not go much further than where it's at. But anyway, look for it to stop somewhere between the 34 and the 50-day moving average, which is at 160-ish. Sky. Again, similar type situation. We had a breakaway, ran hard. How far did it break? Let's take a look and see how far it did on this breakout from earnings. How far did it run? It ran up about 27 points. So it's 125%, 20%, 27% up there. and it's sitting about 20% above where it broke out from. So watch for it to pull back where back in this whole gap up here is a strong level of support, but also where it did this little flag, that also about 74 to 74, let's see, 74.62 up to $75. I would be looking at a potential. If it gets down there, that could be an alert to buy some sky. That rhymes, man. Buy some sky. Okay, DA. Oh wow, this looks really nice, guys. DAVA. This is one of those where I would, say this is, pound the table on this one. This again, this was a strong stock environmentally on the fundamental list. It is testing at the 50. Let's see what transpires. Now, we did this fall from here to here. That is about a 14% drop. So we'll just watch it and see what happens. Could it go a little bit lower? Yeah, it could. What's the most interesting point on this is this level right here, where it did its past breakout right there. That's an interesting level for me. So that's just a little bit above 144. Again, DVA. So DVA again. I'm going to basically put that DVA and Crocs looks really good. Now, when I say good, I just mean from a technical standpoint, and plus they held up better than the a lot of the stocks in the market. AMD, look at that. You look at AMD's chart and you're going, where was the market sell-off on AMD? Didn't happen. So watch this. We do not have, it is basically driving sideways as the momentum is shrinking. Do we have a trade? Heavens, no, we do not. Where might we have a trade? Maybe down, if we get a pullback into the, I would say 145, 146 level down to 143. It could, look for a weekly flag down here because it looks like it's getting long in the tooth with its momentum on a weekly chart. So watch that. Look for a pullback towards the breakout area, which is right here at 122.84. NVDA, a lot of you guys have been following NVDA. NVDA is stalling out just a little bit, but again, holding up much better than the rest of the market. So NVDA is another one. Keep that on your list. Is it ready to buy right this moment? No. But what will oftentimes happen is as the market indexes rebound, these stronger stocks rebound oftentimes faster than. So now let's go on to the next one, which is Hub. Now Hub is, what is it? Hub is HubSpot. And again, holding up fairly well. Do we have a trigger on it? Not really. One of the things I don't like about Hub is, let's see what kind of, it's got I think it's fairly low volume. It had volume, but it held up exceptionally well given the condition of the market this past week. Okay, let me see what else. So now here's the 4 stocks that were new to the IBD 50 this week. AM8 this one. AMN. And I have not had time to really go through and check these stocks out, but that's a healthcare provider. What's it doing? It's basically back up testing its past highs. Look for the zigzag around. Really, interesting move here after earnings. Kind of an ugly chart. I would, kind of throw, I don't know if I'd throw this one out. Is it worth watching? There's probably better stocks out there like this one, AOSL. Now, AOSL, again, also showing some positive signs. Don't like the volume on this one. It's less than 300,000 shares. And so I kind of pass unless I've got 1 million shares or more per day. So nothing on that. What about Dick's Sporting Goods? Dick's Sporting Goods looks like it held up pretty darn good considering the big sell-off in the market on Friday. Dick's was actually gapped open, but then filled the gap before the market closed and got back above a very important line, the 50-day moving average. So, yeah, Dix, I would, again, I would look at keeping Dix on my list over here. It fell off with earnings, huge hammer, but that's really not a downtrend. It's reversing. But we've got some really good support down here. It's kind of a sloppy pattern. So oftentimes when you get these sloppy patterns like this, in other words, big, huge range days, it can be a great stock, but what you want to do is just move it to your watch list and wait for the pattern to start being more predictable, like we see when we look over here to the left. Nice, compact, tight pattern. This is really sloppy. And here's a new one also. Just had earnings. XPEV, good volume, up over 10 million shares. And this is a newer entity. Yeah, looks like it came public back on 8/24. I don't even know what field they're in. Okay, it looks like a Chinese Xpeng. I'd have to go and take a look at that. Let's go here. Yes, it is. It is a Chinese stock. And so now, are you a person who trades Chinese stocks? It varies. People have different opinion on whether they should or shouldn't. And so when I'm initially doing a cursory review of the technicals, which is the charts themselves, I don't necessarily, I don't cast judgment at that time. I do that in my deeper analysis. So XPEV, a lot of buying came in on after earnings, pushed it higher. As you can see, on the weekly chart, we have a long tail. But it's, basically, if you're looking at this, down about $47, $48 is where it basically broke out from broke above the swing high right here and put it back into a uptrend. So we'll see what transpires from there. Where might it go? Here, let me just give a really quick target for upside on this, and it would be from here to here, back to the low, which will go over there. That gives you the 100% symmetric move, which would be about 58.76, which it didn't come well, it's close to. Then the 1272 is up there at the $65 level, which then starts to look to your left. What does it do? It starts getting us back into then the past resistance area or past highs, which turns out to be, that's where the sellers are hiding out, folks. So there you go. That's what we have. Now, as I promised, I was going to show you where the heck those stocks came from. I don't want you to think, I want you to know that Dennis isn't just pulling them out of the wind, out of somewhere. They come from basically Investor Business Daily. I have a couple of different places I look. One is I had a good buddy who did this up for me. This is basically this is how I collect the IBD 50 and the running list. Basically, it's just now I can't share this with you. It's got some damage on it. I need to get ask Lyle to fix it for me. Lyle, if you hear this video, please let me know if you can fix this. What is it called? It's called a macro, but I just plug in that and then it pops up and gives me here's the list of stocks that are new. And here is DAVA was also on the new list. So that's interesting. And then what I do is I have the running list. 269 stocks have been added to the IBD 54 this year so far. What does that tell us? That means it's been a very volatile year. Normally on a more an average year, you're going to get somewhere between around 200 plus stocks, just 200, 200 to 210. But as you can see, 269. The other list I utilize is this one here, and I call this now this sort that I pulled together on this one is based on a sort, the criteria that Lee Tanner developed, pulled together from Investor Business Daily. And what it does is it sorts through all these parameters established by, that Investor Business Daily measures its trades. And if you want to know more about how to do this sort, because if you have Investors Business Daily and can download the, and also, the other, where you can get the IBD 50 watch list, load that up, and then you can run this sort. And what it does is then I sort it finally until I get the top ones. These are the best. See, DAVA also shows up on this list. So when I get some that show up on two list, that is something to be paying attention to. So up in the corner, up in this area here, you will see, let me see if I can get that. There you go. Up in this corner, you will see a video or a link to a video that will basically show you exactly how to do this sort. And it's called, in case you want to go over to active trend trading, it's called How to Find Strong Growth Stocks. And that is video that I've had up there for quite some time. But guess what? It still works, and it's still a great way to sort through, come down with your basic list, and then it gives you somewhere to focus. Because, 50 stocks, 2 minutes to watch, and I go through over 500 stocks every weekend for you, so I can get down to somewhere between 15 and 20. This is part of the function that I do in order to do that. And since this allows the strongest of the stocks to float to the top, so much the better. As you can see, things like INMD was on this stock for a long time, right at the top of the list. In other words, since the beginning of the year. If we would have been, we were trading a lot of that from the beginning of the year, and did really well with INMD. So that's the other thing I like about this sort. Those puppies right there. That's all I have to focus on. And it helps save you time. So what else have I missed? So that was rapid fire. That was how to find them. Let me erase everything. Go back over here. And let me just double check and make sure I have covered everything. Rapid fire. And as you see, that will speed up your process considerably. Oh, and on that, okay. And you want to go about to the 158 mark on that video, that new video, to see how to sort. So let's go ahead and just finish up today. Just I want to remind you that, hey, do you struggle with any of these? And here's the following. Spending over 2 hours per week finding strong trade setups, uncertainty about stock or ETFs to trade, not knowing where and how to enter your position, fear of not knowing where and how to exit your position, how to trade for wealth building and financial freedom. If you struggle with any of those, I have been there, I have done that, I've got the t-shirt, I've busted accounts, I've broken things, but you know what? In my 30 years of trading, I have basically learned how to master those where they're not a fear anymore. And one of the reasons that I put together the autopilot trading, for traders that basically struggle here, no matter where you're at, no matter how long you've been trading, whether you're just starting or have been at it for quite some time, you may still struggle with these issues. And so what does Autopilot Trade provide you? It provides you a weekly pre-play checklist on the top 5 stocks and leverage ETF opportunities, which include entry levels and triggers, technical signals, a video every week that shows you exactly how I'm placing my orders, stops, targets, chart analysis, and I put that out every weekend so you can then place your condition. If you want to trade a paper trade along with me or a parallel trade, I place conditional orders, and I show you this is where I'm placing my conditional orders, and then I let the conditional orders work for me. Members of Active Trend Trader report back that they can enter all 7 of the opportunities that we provide, the conditional orders for those, in less than an hour and a half every week. And so that's pretty rock solid. And the thing about it is the way you put the order in, it protects you and sets your profits. It sets your loss of orders all in place before Monday even gets there. And that way you can then do what? Go on with your life. You may, work, continue, may not trade for a living, but you may, regular job. And you can basically be able to trade and know with certainty that the trade will take care of themselves. So there's what we have. Hey, prepare for takeoff, activetrendtrading.com, autopilot-trading. And we have beat the market by double digits for the last 10 years, the S&P. Now, that's not a promise that we'll continue to do that. No, I'm not saying that. But we do have a really great winning track record. And what I really love is when members who trade with us actually trade better than I do. I love that. That's phenomenal and fantastic. But $83 a month paid for in either 3 monthly payments of $333 or 1 yearly payment, $997. So you can find that right there. And the link will be also down in the description, along with the links with a lot of other stuff we're going to be showing today. The link to that free video on how to find your growth stocks. So, as I said, I don't know how close I came to 20 minutes. I don't think I came as close as I wanted to. But we jammed a lot of stuff in here for the holiday edition. So remember, hey, 2021, consistent and disciplined wealth building. That's what we were looking for. I'm looking for 2022 to be more, basically continue with that theme of wealth building, to get to the place where we can all find financial freedom and totally let our money work for us. So we'll get going with premium, the final hour next week. That'll be on the 3rd of December. And so for this week, I'll say aloha, God bless everybody, trade well and prosper. And if you haven't started, remember, it is never too late to start building wealth. So for everybody who would normally do, Steve, Anil, I know you guys, must have had a great Thanksgiving. We'll get back together on Friday of next week. And so just please leave some comments. Let me know what you think about this rapid fire format. If you think that we can make that work in our regular videos, that's great. And again, please don't be a ghost supporter. A ghost supporter is what is a ghost supporter? They go and they look at the video and then just take the benefit from the video and then, never say a comment, never give a thumbs up. Please, engage with us so that I can know, it helps me know, am I coming close to hitting the mark? And so with that, I'll just say aloha. God bless everybody. Have a great rest of your weekend. See ya.